We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Hope you guys having a great day, or a great week, so to speak. And I think that most of you have been experiencing the quote-unquote Santa rally. We'll allow some couple minutes for the poll to go through. Right now, we have 13 votes in. And so far, most people are saying yes, their portfolio is experiencing the Santa rally. We'll kind of have a conversation about that. We're calling it the Santa rally because some of the members have been using that term. So I'm just going to keep using that term here. So we see some questions or comments coming in about index funds. Strongman buys index funds only because they went up in the past. Absolutely. He would totally agree with that. How is the LeBron James of investing doing? He's doing really good because he shorted the market earlier this year, and he shorted QQQ and Nvidia, and he did so in probably one of the silliest ways possible. Refer to my post where I also linked the video going over, it's more of a live stream, going over how this individual shorted the market and why it was perhaps one of the worst ways, besides, the decision to short the market, one of the worst ways to short the market at all. So yeah, that's just each day that the market goes up, he's probably sweating bullets, and he's a perma bear. I want to shout out Dan Weston, who made a post recently. We'll actually start with sharing that. I guess we'll begin with YouTube drama before we go into the portfolio update. So let me actually showcase this post here because I think it's really important for at least for viewers to see this side. And I think Dan's doing a good job of really capturing the essence of what this investor is like. And remember, you shouldn't feel bad for him at all, simply because he is quite arrogant when it comes to investing. So the point is, a perma bear is a perma bear is a perma bear. 2015 Paul versus 2023 Paul looks the same to me. Now you can pause the video here and read it yourself. You can probably find them on Seeking Alpha or on the Wayback Machine, because believe it or not, when you delete something, it doesn't actually go away forever. Thank goodness that we have tools to actually see what some of these people actually posted in the past, so they can't hide it. Then we also have this post from more recently that I actually commented on as well. I made a post on this. Quite outlandish claims, simplifying the analysis of using the Buffett indicator. So essentially, if you want to cover it just a little bit here, one of the limitations of the Buffett indicator is not accounting for the foreign earnings of many of the stocks that are in the S&P 500. A lot of the S&P 500 earnings actually come from overseas, so you actually would want to do a weighted measure. That's not to say that the stock market is right now overvalued, undervalued. It's not a commentary on that at all. It's just kind of addressing some of the limitations of a very archaic measure that he is resting a lot on and using that to then make investing decisions. That's the problem with actually operating off of false information. So the investing world doesn't care about your feelings. Whatever you think the world should do, that doesn't mean the world will do that. Let me see if we can actually make this view a little bit better. I'm going to play around with this. I think this one's better because you guys get a better a view of things. So let me go ahead and see if there's any first, or let's call it last minute questions before we get into the topics of today. Because I think the first thing we'll do is the portfolio update. Just so everyone's aware, this is the pre-live show. I'm going to be doing the ICOM. ICOM is something that we do in the club where it's basically a private live stream with the other analysts. And in this case, we're doing this live show here. And I'll be doing the portfolio update, and I'll be doing the holding co portfolio update, kind of also addressing some questions along with the changes to the personal holdings portfolio and the holding co portfolio in that. Okay, so I don't think we have any questions to catch up on, which is good. and that means we can get right into the topics. So sometimes I like to see if anyone asks questions before the live stream started. So 4 likes. Well, I don't know. I guess people don't like the content, but it's okay because this is for fun. Been selling puts as the main strategy of the portfolio. I try balancing equities with TLT and gold to hedge risk. My concern is that all assets are correlated. So selling on margin may be too risky. I mean, the concern about correlation of all assets is not my main concern. I think that maybe you're just overcomplicating your strategy. I try balancing equities with TLT. So, because TLT is not meant to be, in my opinion, a holding product. If you really wanted to hold bonds, just hold bonds. TLT is meant as a instrument to bet on a specific move over a period of time. It's not as dangerous as its levered peers like TMF, which is essentially TLT on steroids, where the timing is even more crucial. But TLT, I view it as an instrument to bet on, for example, rates going down on the long end, and you're not wanting to take as much risk on the timing of it, as well as on the volatility. So I don't view it as a way to balance a portfolio with bonds. If you want to balance a portfolio with bonds, not financial advice, I'm just sharing my opinion with you. You do what you want at the end of the day, but I view it as you should probably just utilize bonds to get that exposure. Yeah, Ricky puts it up nicely here. TLT is just a swing trading instrument, low key, and almost not low key. Talk about the Fed. We're going to talk about the Fed a little bit here. There were some, I guess, discussions we can have there. Let's see. Capital Mind says now the time to Paul short the market. To Paul G short the market. Oh, time to follow him in this. Well, definitely just don't do it the way he's doing it. I'm kind of almost permanently long. I don't think there will ever be a time where I'd say I'm majority short. Shorting for me is a very rare occurrence. Oftentimes I will just be long. I'll just be long, or just if I'm being more cautious, it'll be just accumulating more cash. I'm young. I don't need to take excessive risk, lose an unnecessary capital. Any opinions about cost performance this year, as well as their announcement of the special dividend? So if you guys don't know, with the club members, I do a game where every time I go to Costco, I buy 1 share of Costco. And so we've been accumulating Costco within the holding co portfolio for a little bit here. And it's been fun. It's been fun. It's slowly growing. One thing I will say, because it's pertinent to what's happening right now, Costco announced a special dividend today, and it's actually coincidental. For those of you who are in the club, you guys remember we were having a conversation about this just the other week, where Costco typically has a capital allocation strategy that after a certain amount of cash is accumulated, management decides to do a special dividend. The last special dividend hasn't happened for a long time now, and the cash was getting kind of up there. So we were like, sounds like, or looks like, a special dividend is going to happen anytime soon. Lo and behold, today we got the announcement that there's going to be a $15 per share special dividend for shareholders as of 29 of December, I believe. It's towards the end of December. So yeah, that's happening. 10% like rate, not even outperforming VT. For who are we talking about there? I want chicken bake, man. Oh, I tried the chicken bake today. It was pretty good. It was pretty good. Okay, I think we can get right into the portfolio update. So the portfolio update, let me go ahead and set us up here. And then I'll kind of just go through quickly some of the changes here. Got any counter for looking for? I don't know what that means. All right, let me go ahead and present the screen. Fax me your cost shares. No. Tempting, but no. 50 likes and 50 people watching. Well, if you guys like the video or the live stream, let me know by leaving a like. And if you don't like it, all right, whatever. Doesn't matter to me, but thank you for shouting that out, Patrick. All right, so we'll go over the quick changes here, going down the list. Some of you might see that some of the speculative holdings have actually moved over to the non-speculative holdings. That includes Zillow, so it's just a categorical change. Also, the accumulation that I've been discussing within the club. We've accumulated Zillow on the recent downturn while I was in Europe, and then after I came back from Europe, I started accumulating more Zillow group there. But again, there's been a product change or a classification change from speculation to non-speculation, and as well as Rick. So yeah, there's Rick. Rick also was changed in classification. That's completely arbitrary, by the way. I just decide. What I decide is speculation is simply put, if there's something about the company that I can't really wrap my head around or I'm not too comfortable with to fully commit to. The ones that are staying in speculation, for example, is Coupang. Coupang is currently actually my only legitimate speculative investment because BurgerFi is a fun investment and Baba is literally to make a point. In the capital mindset community, actually, Alaka, if you're out there, you had the meme that you created because it's actually quite true. The Maslow's hierarchy of investing, he calls it. I think it's kind of funny. So after a certain point, once you've achieved certain goals in investing, then you start to invest in a way that's kind of memey, and you even make money from your memes. I guess you could say. There's been, I guess I can say when Bacon comes on here, because I think Bacon's gonna. I'm gonna share with him the link, and I'll ask him on the spot to talk about the recent meme investment that we made money in, but. It's not one that he wished I would have done it. It was actually more of a fun. We'll get to that. We'll get to that. That's its own topic. We'll get to that. I promise you, it's somewhat entertaining for those of you who like those personality types. Okay, real quick, some of the changes that occur besides the classification was the addition of Park Lawn Corporation. I'll talk about that in just a second, but we'll brush through Park Lawn. We've been selling Musa. If you guys have been watching the past couple live streams, I actually revealed that I sold a bit of Musa. I sold it entirely in the holding co, and then I sold a good chunk of it here in the personal holdings. Now, Musa is probably going to unwind a little bit here. What I've done essentially in the rationale, and I'll repeat it because this will go onto the link in the past trades tab where it showcases why it is that I sold, at least the rationale. The reason for selling Musa is the thesis played out quite nicely as far as the re-rate of the stock. So we had a bit of multiple expansion. The buyback strategy worked really well. However, that being said, the buyback strategy now works less well at these higher multiples. And so it actually defeated the purpose of why I wanted to invest in the stock, being that the capital allocation strategy right now, I don't think it's prudent for the company to actually buy tons of stock back. So I actually would prefer them to announce, hey, we're not going to be buying back any more stock for now. We're going to be paying down debt, and then we'll proceed to buy back stock in the future. Addition to that, I think that Musa has a probability of succumbing to short-term negative sentiment around energy prices. Not that energy prices necessarily affect the business, but the reality is still that investments can move just simply on sentiment, and Musa might get lumped in with a bunch of other energy stocks. And right now, energy is actually under pressure. We can talk about that later in the live stream. So for now, that's the gist of why we sold Musa. And I'm providing that to you now publicly on YouTube rather than just to club members. Okay, so the other one that I've already announced publicly, so this is not new information, but I just want to readdress that Steelcase. That is on the chopping block. That is the next stock that you might see exit the portfolio. I may, in fact, wait for the company or the investment to get to long-term cap gains in order to just get the best tax benefit out of it. No plans on that yet as far as anything solid. I'm exploring options as how I can get out of the company. One of them being I could just actually sell calls until the shares are called away from me, because I would say at this price, I'm comfortable with letting go of the shares. I'm happy with the run up, with the gains that we've had, and a lot of the theme has played out, but it could still run up from here. I said that publicly in my post on Twitter. I don't know if I made one on YouTube, but I did make one on Twitter. Then Siltronic is a new one that was added to the portfolio. I don't have a video on Siltronic. Siltronic's one that we've analyzed within the club. It wasn't my idea to begin with. The initial investors were doing really good amounts of due diligence and shared it with the community. One of the things that Siltronic does fit is within my overall arching theme. So I've been investing in 3 categories. Well, you could say the 4th category, but the 4th category, it just gets smaller. So it's 3 main categories and probably a 4th smaller category. The 3 main categories being semiconductor, but I've been not investing in the classical semiconductors that people think. As you can see from the port, I've been focusing mainly on fabrication. And then the secondary being REITs, third or tertiary being retail, and then the 4th one being financials or banks. So retail has been my weakest one. And in fact, I haven't had a single win really with retail this year. So thank God it's my 3rd. And then financials, we did good with consolidating to US Bancorp, but retail has been our huge weakness. We haven't had a single win. You can't really, I wouldn't count Costco. There was one stock, I won't discuss it here, but there was one stock that I found that was interesting. But so far regarding my track record and retail investments, it's not pretty good. You know how Stanley Druckenmiller says every time you talk about, or every time he talks about Japan, you should just short his Japan idea. Maybe that should be the case with retail. Just short every time I'm talking about retail, and maybe you'll do good. Actually, you know, don't do it just in case I'm right, but hey. Then I've also accumulated more Sun communities. We're down for now in Sun communities. That's one of the real estate ideas I've had. Zebra Technology, we're actually finally back in the positive. Oh, sorry, we're not back in the positive. We're almost back in the positive. Jumped ahead there. And then Tyson Foods, nothing's changed there. CrowdStrike, nothing's changed there. Toast is relatively new position. I think as far as public updates go, it's a new position. And then Crown Castle also, as far as public updates go, it's a new position. There was one more. Oh, Alexandria. I skipped over Alexandria. Alexandria also relatively new position as far as public updates go. And that pretty much covers the updates across the board. I'll talk about the a small discussion on Alphabet, because Alphabet I've been discussing with some of the club members here. I don't have a concluded plan, so what I say here might not actually be the case when I do the next portfolio update. So just keep that in mind. This is an ongoing discussion I'm having with club members, but it's regarding Alphabet. There may come a time here soon where I sell Alphabet, and that would be a big deal for me, because Alphabet is one of my oldest investments. Oh, I see, Cole, that you texted me. Okay, hold on, let me just respond to this. Not to you, Cole. This is actually a work thing. Okay, perfect. But anyways, Alphabet might be a position that I end up exiting. And if it is, then that's a big change. That's a big change. I've never sold a single share of Alphabet, so selling a share of Alphabet would, again, be quite impactful. I won't have to worry too much about the short-term cap gains at all, because all the shares are long-term cap gains at this point, and some of them, not all of them, unfortunately, are in tax advantage accounts. So there's that. And the other component that nothing's really changed here is on the speculative side. So I actually even changed the asset class to lulls here for Alibaba, because some people, for whatever reason, even though I have all this negative content on YouTube, think that I might actually be long Baba for legitimate reasons. No, Alibaba is one of those investments I said I'll make money on it, kind of trolling the investors of Alibaba. Coupang is the only legitimate speculative investment I have left. So what classifies, or why the change for Zillow and Rix? Well, Rix actually should have been changed a while ago. Again, it's completely arbitrary, and you know, it's just like kind of moving it around. But the classification for Rick was changed technically in my eyes a long time ago, once I understood what the management was doing as far as capital allocation goes. And I really, really enjoyed learning and seeing how they've executed over the past couple of years. So I had to not I had to, but I decided upon changing that classification and became more comfortable with committing more capital to the business. Now, Zillow, I always said when I gave you guys videos about Zillow, I always said that they are a speculation until I start to see that management is executing on the vision that I believed was better for them. And that's a good portion of what investing is. You have a thesis, you think a business should do X. You might be wrong, but you should invest in what you believe in, right? And then as if that business is doing exactly what you think they should be doing, which in this case is expanding upon adjacent services that makes them more of a platform rather than getting directly involved in the real estate process, such as iBuying, for example, then, you know, you should, in theory, if you're being logically consistent, be thinking of them as a management team that is executing well. And so that was my end conclusion. Then I was comfortable with switching them over from classification of speculation to core or actual investment, whatever you want to call it. But I consider them a core investment as kind of like real estate tech. But we'll see where they go from here. I have high hopes for them. I actually boosted up my cost basis a little bit, but all that to be said, it's still some that I would probably like to accumulate. We had another opportunity recently when the stock came down. So if you took advantage of that, congratulations. Right now, with the volatility that, well, Zillow and other stocks have been experiencing, it's rallied right back up to 54.50, and I'm not personally adding. So is this a deep value play for BurgerFi? No, you know what? I'll come out and say, like, I would not. I would definitely not buy BurgerFi. I will be surprised if they don't go bankrupt. So if you ask me what is the thesis on BurgerFi, milkshakes, because it's like a fun investment. I would literally throw like spare change into the stock. I wouldn't do that. So, and also because Fuhat here, he absolutely hates it. So I draw a lot of entertainment watching him like seethe for whatever reason, just knowing it's in there. Fuhat's very passionate about restaurant companies, and like, for example, this. Okay, I did see some questions come in. What is your number one buy? What am I buying right now? I actually won't say the stock that I'm buying right now a ton of, because that's actually going to be talked about in the icon. So really big cop out, but I'm sorry. Let's see here. Insurance got crushed today. You drawn more to. I haven't checked any of these guys, but right now I'm kind of tapped out for a ton of cash. The holding co is tapped out. Personal holdings are still roughly about 10 or so %. So I still have some more cash to deploy, but yeah. Where is Coin? Well, Coin was all you, man. Coin was all you. By the way, shout out to Cole. He legitimately said, I asked him the question, what is one stock you'd buy? And it was Coin. He did say Coin, and it was basically at the bottom. All right, so I'm going to go ahead and share the link to the individuals that might decide that they want to come on. But just in case, they have the link now. Okay, so that covers the portfolio update. I think that the portfolio update, oh, and I guess we can go over the portfolio visualizers so you guys can better see the, it's too zoomed in now. Ugh. So we're still really heavy in meta, and oh, look who it is. My co-conspirator in all things Alphabet, that we are so disappointed, which I think we can have a conversation about.
You see my name? Is that why?
Oh, no. Let me get rid of the comments so people can see your name. Diversity, equity, inclusion, remember. Beautiful. Beautiful.
That's where all the values found.
Before I forget,
Yep.
Crocs. Before I forget, because I do want to cover Crocs. Okay, so
Yeah.
what was Crocs?
Not for you.
Not for me, yeah. But in this instance, I did buy Crocs.
All right.
It was to joke around with bacon.
Yeah. Well, all right. So, like, what answer are you like looking to fish from me? Because by definition, it is a winner for you. It is a realized winner. I forgot when you entered. Was it like about a month ago?
It was when it was in the 80s.
Yeah.
Yeah.
Yeah. So like if we annualize the returns, that'd be incredibly impressive. And even if we didn't annualize it, and we're like, yeah, in this 1 year, the period of time that you held Crocs, percentage wise, it's a win. It's a win. Congratulations on your win.
Thank you, but it wasn't for me. I was too
No,
stressed
it wasn't.
out.
It wasn't for you. No, no. I still believe that.
That's actually every time Bacon would see it in the port, he'd be like, "It's not for you.
No.
It's not for you. Why is it still in there? It's not
Yeah.
for you." But okay, back to the Google. Well, we have our honored guest, the committee member for the diversity, equity, and inclusion.
Mhm.
Which is
at
ironic
Google.
because of what I am, but
Well, we all know it's greenwashed or whatever.
I'm
But-
just basically here to like call out because then I can be the token one that calls out the evils of my kind.
Yes, that is why you're there. So, how do you feel about it?
About Google?
Yeah, I just want you to vent.
Google.
Upgrade, Bob?
Okay. I think Google search, that product, is one of, okay, so you have the Apple iPhone, which is a better product than Google search.
Mhm.
I think Microsoft Office, I don't know enough about the actual details of it. Microsoft Office is pretty amazing. Outside of that, I think it's the best product. And Amazon, I know you're going to say Amazon.com. Because I like kind of break out Amazon's different products because you have the actual retail, you have the ads that are like a bolt on, but I'm saying just one product. I think it's like one of the best products out there. And as much as you can try to convince people to go to Bing or go to something else, they just won't because Google's better and it's easier. With that being said, I feel like you have the weakest management team of definitely big tech.
Yeah.
And when I say management, I'm not just saying like CEO level. Like I'm saying when you look at how Google's run at a mid-management level and the terrible inefficiencies they have there, where like Google's like it's how some people describe it's like a glorified babysitting place. Like you get there and just kind of like, yeah, it's supposedly like really easy, and people talk about the joke that is sometimes the work culture there, even compared to other like tech companies. And I've shared some stuff with you about like not off stream about like they're more focused on DEI than they're focused on making a good product. Sometimes they're more focused on like making sure like their management style seems to be, if you can impress me by telling me that you did a bunch of stuff without actually showing me any substance, then they get impressed by that, is what I've taken away by looking at like how engineers work there. With all that being said, I'm like, their products are so good. Like YouTube and Google search and YouTube. And I know people will say YouTube's not a good product because it's really GCP, but like YouTube is an amazing platform. Google search is an amazing platform. I'm just like, and so, yeah, that's literally like what you're describing there. So I'm just going to read what Michael just said. It's that my brother's girlfriend works for Google. He said she makes $400K a year and doesn't do anything. She works for the materials department, which maybe that's because, they're all tech. So what materials do you need? No, but on a serious note, there's a YouTube channel. Can't remember the name of it, but basically, literally that's what he described. It's like I make $400K a year at Google and I work like at max 10 hours a week. And, so the part of me that finds this interesting is it's like they are doing everything they can to like run this company into the ground and they can't do it. So maybe this is like the obvious buy because it's like all it takes. Like I was hoping when Sergey Brin and did the other one come back too? When he came back, but I was hoping that they would either fire Pichai or get like, because I mean, let's be honest, I'm just looking at this from the outside, and I don't know if Pachai's doing a good job or not, or like if he's the reason for the inefficiencies there. But I was hoping that they would bring a lot of cultural change. Like my favorite thing was when Google employees were complaining because like they took away some of the free food benefits, and they're like, "Our lives are so hard now." I'm like, dude, you talk to some. I think in Bacon, I think thought I was taking a shot at Midwest America, and I'm not because I'm from there. I was like, you tell someone in Midwest America like your problems, they're gonna be like, "Screw you, dude. It's 5 degrees outside. I have to go to my factory job. Like, I don't want to hear about you like complain about your free food." So that's my rant. Is like, if they can figure out how to just like fix the culture there and to be focused on actually being like a productive culture and employees, I still think just the products and the platform and what they have there is so amazing. So
Yeah, I just want to be careful that they're just not going to rest entirely on the shoulders of their past, resting on their laurels, so to speak.
Mm-hmm.
So it's what is this?
Well,
Biden's worrying about China getting it. I'm trying to see.
Oh, Michael Anthony's comment.
Goes from 2015 to China or a company in China, and Biden. So worried about China getting ahead of us is just crazy because the USA is all Motorola, like 9/11, FBI, and much more.
I think what he's saying is that does the FBI and use Motorola?
Don't know.
Sorry, I don't.
Yeah.
Don't know. But
I don't follow there, but we're going to talk about oil because I see some questions. We'll get to these.
yeah.
And
Oh dear God, that's
we can have
another
a
thing I have to-
conversation about Bitcoin. And
I gotta
I'll
eat my
talk
words
about-
on oil. Like if we got some more days like what we just had, like I will have bottom ticked oil in the weirdest way possible, in the way that makes me grumpy.
I mean,
I don't know. I never get grumpy if I bottom tick something.
No,
Unless-
no. It's because like there was a live stream that Dan hosted that he
Mhm.
was like nice enough to have me on. Like tail end of it, I was like, yeah, like you know how Dan, how you mentioned that oil/energy companies like the opportunity may be coming up. I was like, yeah, opportunity seems to be a knocking. If the price trend keeps going, I think there's like wide opportunity for you to just limp in. And sure enough, I bought my watchers, and then today happened. And if it keeps going, I will have bottom tick with the watcher as opposed to just buying. But yeah, well,
I want to also just really quickly on Google Jen.
Yep.
So I went to the New York City office through my friend. It feels like an airport lounge.
Mhm.
free food off the backs of shareholders. Yeah.
You get an ego boost for doing nothing. Like I'm actually fully okay if you have a company and these people, it's like are going in there and it's actually just you're working a ton. The food's there because working conditions. You know, you're working 10, 12 hours a day and you're doing exciting stuff and building things. I have no problem with it. Just the feel I get from everyone is it's like go there, they feed me, I can go take a nap in the nap room. And then I, you know, after working 3 hard hours, I go home. So, and we can move on to.
Yeah.
Oh, 911.
As in the emergency services number.
I was thinking 9/11. Like,
no. But yeah,
okay.
I really like behind the scenes for people. Like, I really didn't think that you guys would be so bearish on Alphabet.
We're not bearish on Alphabet. We're not there yet.
No,
just cautious and looking for the door.
We're disappointed. I'm disappointed. I'm disappointed in the current state of affairs at the company. That I feel like they have so much potential to be great, and they're choosing not to.
I agree.
Yeah, they have. It's like they're like someone, I don't know, getting into football, and they're like 6'8", just pure muscle, and then I don't know, they're just what would be the analogy that they go into
My,
gymnastics where they have a disadvantage.
I don't know. My analogy for Google would be like DK Metcalf if you're talking sports analogies, but
Oh, okay. Oh,
Sure.
wow. Whoa.
DK Metcalf is like,
Yeah.
in
yeah.
my opinion, the most physically gifted wide
Mhm.
receiver in the NFL. The guy eats like 2 bags of candy a day though, and he's just like he's good.
Yep.
He could be so much. This dude is a freak.
Let's cover energy real quick because
He's
this
like
is
moving on.
Just before you do though, like on the topic of Google, I feel like there was an old guy who really likes to eat McDonald's for breakfast who said something about management teams.
yes.
Pick a wonderful business, and it's a wonderful business that it succeeds despite a bad management team.
Yes,
I
Google's one
I
of them.
forgot the guy's name though. Like he may be going places though. All right. Anyways,
Paul?
yes, energy. No, Buff Dog. Buff Dog.
Oh, because Paul eats McDonald's for breakfast. Okay,
Yeah, Buff Dog.
He does it only because Buffett does.
probably does. Okay.
Yeah. All right. Does anyone think falling oil is due to world economy slowing and rapid disinflation? Well, I have a couple live streams that go over this in the past, but just quickly covering it again. We went through 3 oil market contangos this year and end of last year, which is supposed to mean what you're supposed to get out of that is the oil market is concerned about forward demand.
Mhm.
And that occurs because we have, let's say, let's call it, we're betting on demand destruction. We also have, of course, yield curve is still inverted.
Mhm.
And we know that recessions the observable recession tends to occur after the uninversion of the yield curve. Again, it's not like one causes the other. It's just something you can observe that is being caused by other forces. And so we have basically 2 signals right there that are cautionary. Now, that doesn't mean sell stocks, because there have been instances for recessions where stocks still go up.
Yep.
It's more complicated than that, but you do want to take note of that. I guess if you're looking at your own personal life, you're going to be taking on excessive amounts of risks. Think about how much risk you can handle. So that's a separate discussion. It does, though, have an impact on certain stocks for sure. So if you're talking about a drop in oil price, a sustained drop in oil price, yeah, sure, that will have an impact on some of the stocks that we're discussing. Chevron, Exxon, one of the stocks, Musa, that we just talked about. Why be bearish oil? Peru
Succena. Is that what he means?
Yeah, Peru Succena.
Okay.
Yeah.
Observable for people tends to be like unemployment rate rising.
Yeah.
So
Lagging
that's what I mean by
indicators.
those are always lagging exactly. Big. Those
Yeah.
are always lagging indicators. I don't know why people die on the hill of unemployment and they say I'm not even going to think about recession. I'm not going to even call it a recession until I see the unemployment tick up, when that's one of the last things you see.
Yep.
So
yeah.
Shout out Swaggy Pig Fig.
I wanted to comment on this. I don't know what you just pulled up. Is that you, Fabio?
Yeah.
That's what I was looking at. I think on a very short term, maybe, but I think on a general, I disagree. I think so. Stocks going up is just an indicator that the market is just a beauty contest, devoid of rational valuations. I hear this talked about a lot when people underperform.
Yeah.
And I think in the short term there's a degree of that, right? Like when you have I'm trying to think of a really crappy company that's been flying lately.
Pick an airline company.
Sure.
Yeah, because like a lot of airline companies are worth billions of dollars as far as market cap goes.
And have they been just like skyrocketing? Like one of these companies, like, and you see it happen a lot where over a short term, Carvana, that's a good one. Although
Carvana.
So Carvana's just like done amazing this year and it's skyrocketing. It's like, wait, what?
That
Of
is
course,
what we call a pain trade.
Yeah, but then you look at like where it was at in 2021, you're like, oh yeah, it's still down 85% from there.
Yep.
And I think that it's more of the market does go through like euphoric cycles on either end, and your job is to find companies with actual valuation, with actual fundamentals, where when it goes euphoric against you, like you have to kind of play a little bit knowing like what's going on and say the market's going to realize this is undervalued for XYZ reason. And I guess I just see this a lot talked about by people when they're underperforming. I just personally disagree with it. I don't know if you guys have opinions on that.
Yeah, I think that this is what you were saying, but I think that in any situation, there's always a business out there or an asset that's of good value.
Mm-hmm.
You don't have to be broadly short then broadly bullish all the time, like some of these traders that some of the members have been actually. I'll shout you out, Ricky. Been indicating, such as Peru Saxena. Like the guy is, I think, absolutely insane in a bad way. It's not a stroke of genius. It's just a stroke of insanity.
He flipped to value at the worst possible time. But continue.
Yeah, no. So Peru Saxena, he was in, let's call it, what would you call it? Growth. He was long growth, whatever he calls it. I don't know what he calls it. He was long growth, and then now he announced just a couple days ago that before this rally that he's had changed his allocation to a large allocation to T-bills, high dividend stocks, and then basically taking a lot of exposure to the 2-year as well. And I think he said it before that he had some exposure. Those dividend stocks, by the way, include BTI, Altria, Philip Morris, which I think all of those have lagged this rally. And he basically sold all the stocks that experienced a strong rally. Yeah, like 5 days.
Because didn't BTI also get like punched in the face pretty hard?
Yeah. So he's actually, he doesn't miss. So he's actually the one that do the opposite always of what he does, and you actually would do probably pretty good. One other thing, let me just address, because by going long T-bills, remember that T-bills are not going to move in the direction to the same strength that something like a long duration bond would. So if you look at TLT, and let's use a more blended product, GOVT. This is a more blended product, which is, I think, what's a ticker for an ETF that holds T-bills? Not Bill. I forget always, because I don't really care to use the products.
When you're saying T-bills, you're saying the short-term ones?
Yeah, short-term ones. But this is a more blended product.
What is it?
I'm drawing a blank.
Then TLT in the past 5 days.
I mean, if you used like the right money market account, wouldn't that probably correlate very well?
Well, yes, yeah, it correlate. But point is, he's not going to get any of the upside exposure that you would be getting by going long on long dated bonds. So playing rates coming down. By the way, there are better ways. There are some equities that are much better to play than what he played for rates dropping. Going long dividend stocks. Yeah. That's so dumb. Like was he actually a fund manager? I mean, anyone can be a fund manager. That's the thing. Anyone can do it. Thank you. TBIL. That's very intuitive.
And I always forget it.
So this is what my point is. Like in the past 5 days, TLT moved almost 5%, and then T-bill only moved 0.1%. So he basically neutered his portfolio right before the rally. But keep in mind, he's done this consistently this year. So he would go really long right before just some sell-off. Like, for example, right around before October, he went long. I don't know how he has this luck. I don't know what he's doing, but please keep doing it. No one tell him. I swear to God, if any of you tell him,
he's not going to believe it. Come on. Let's be honest.
I hope, I pray that he's so diluted that you know, he never lists to anyone.
Yeah,
But he's amazing. He's an amazing resource. He blocked me, by the way. So I actually recommend everyone here follow him if you want to.
and feed you info.
Feed me info, please. He's
What
a
did you say to
priceless
get
resource.
blocked?
I have no idea, but
Did
he
he like
blocked.
watch one of your streams?
He might have watched one of my streams, and he was offended by what I had to say about him, because I was a little bit not. I didn't directly call him a moron, to be fair.
Like when it comes to macro and also the old question of like, you know, are markets frothy and all that, like
Yes,
it's real easy to get wrapped up in your own opinions and whatnot, and I like to base things off of simple null hypotheses and simple assumptions of, hey, maybe I'm the idiot, maybe I'm the sucker at the table, so try and minimize like the amount of predictions or like biases that I have, or like at least be cognizant of what I have and what I bring to the table and work around that. So like, you know, like say for example banks, like I don't freaking know what I'm doing as far as trying to value a bank. I got like a vague idea of the business model, but like am I gonna die on a hill and say, oh, JP Morgan's overvalued, or oh, like Citi's undervalued? Like, am I gonna put money behind it to lose one way or the other on either of those?
Yeah.
Yeah. That's just me. That's just me. Frothy.
This is also I would say yes. Do
Yeah.
this. Do not trade on macro.
Yeah, macro. It's filled with so many strong hot takes and opinions, and yeah.
I would not say that ignoring macro is
No.
the way, but it's like a very there's a sweet spot,
Mm-hmm.
and it's really easy to get carried away.
Like
It's really easy to get carried away.
like anecdotally, actually, like even though like there's a lot of stock talk, would you say that the bond market is closer to more in touch with macro, you guys, or no?
Yes.
All right, and here's the funny thing is like I know people like to dabble with acquisitions like merger risk, merger arb, like, you know, merger risk. So like one of the things that people could do is when there's a disconnect between acquisition price on the stock and the deal price, is if one of the companies offers bonds, take a look at previous pricing and where the bond prices are currently. Bond market may differ with the stock market. Like concrete example would be Spirit and JetBlue.
Yeah.
There was a massive disconnect on the stock price, but bond price is like, yeah, this deal is coming through. We know that as the bondholder, we're getting screwed.
and that's the hint that you got. Yep.
Yeah. Yep.
Yeah. No, I'd argue yes. In stocks, I think there's more often than not you'll find disconnects than I think you would in bonds.
Why do you think that is?
Why do you think that is? I think that the types of eyeballs that are on either. So, but it was often said when I was younger. I remember learning that bond investors think stock investors are morons.
Yeah. The only thing bond market participants failed was recess because they don't play.
Yeah, they don't play. Yeah, it's a whole different world.
Yeah.
I always thought that it's like you said, it's very different because my thought was you get less like caught up in hype as a bond investor because what you're worried about is will this company go bankrupt? I mean, like ultimately,
Yes.
I mean, so your upside is getting the bond to
Pay out.
maturity. Yeah. And so I think you get less caught up in hype. Maybe that was the only thing I could really, because I mean, like I still got, I think institutions drive a lot more of the flows in the stock market than like when you're saying eyeballs. I'm assuming you're implying retail or something. I don't know, but
yeah.
So that's the only thing that I think also maybe it's just
don't think for a moment hedge fund managers are any less degenerate. They're just as equally degenerate, just with more money. A lot of them. Not all. A lot of them. So that there's the whole mix of the bag. A lot of capital is controlled by degens. more than what people think. Some is not. A lot of it is not. But
so you're saying like Tiger Global's degens,
don't
SoftBank
Ooh.
degens?
That one, oh well, okay, that one. Come on.
yeah,
But
I'm just
Tiger,
taking some easy shots, but
yeah. Like there
Yeah.
were some people from the Tiger tree that like gotta not be complete degens, but
well, let's talk some macro real quick, because I think
Yeah.
that's where.
people want the value.
Well, you complained that we didn't discuss that the other day.
It was a joke. Come on.
So we know that we saw, or we've been observing, some disinflation, so slowdown of inflation.
Mm-hmm.
And does anyone recall what we talked about? Think back in spring of this year regarding inflation figures. This was when we were still printing high. I'll give you a hint. Had to do with housing.
Was YOLO into REITs because sooner or later I'm going to release a live stream and do a victory lap.
No, this is not
that's
that. I'm
not
not doing that
housing
yet.
though.
I know. I'm trolling. I'm trolling here.
It was about housing.
Yeah.
It was about the contribution of inflation due to housing.
Oh, you're talking about the
Yeah.
owner's equivalent rent?
Yes, and why that was. So looking at the other measures, we saw them come down ahead of housing. And if you just focused on housing as kind of like, oh, that's interesting, what's going on there, and then learning about how that's calculated, the following events would have been a little bit not easy, but understandable as to what happened next. Like, you'd understand more what happened next. And that has everything to do with, I think it's like roughly 30+% of the measure is housing, which is, again, when we think of like the basic one, owner's equivalent rent. So it's a survey of what you would rent your home for. So that lags. Essentially, that lags. All right. So establishing from that base point, we can understand why the CPI measure holistically might lag what the actual inflation rate might be in both directions, by the way. That was my point back then, because even when we were in 2020, the inflation rate was lagging what the actual on the ground inflation rate was, but it would catch up. And then the same thing is happening now on the way back down. So that's what Powell needed to see. Remember, we're not getting into the discussion or the debate of how much influence the Federal Reserve has over the economy, because there was a video I did discussing the nuances of what federal policy does to the stock market versus what federal policy does to the economy, because I think that's actually a really important distinction. To summarize, I am of the belief, and I can explain that further if we want, that the Federal Reserve has a much more direct impact on the stock market, but not as much of an impact on the economy as what people believe. So it is impactful when we're talking about stocks and how the flows work, but not as much as when we're discussing the real economy. Indirectly, and the Federal Reserve addresses this too, by the way. That's also why I believe this so strongly. They talk about this in their own papers, that they do have an effect over the economy via the wealth effect. And then they talk about the importance of the wealth effect. So if they can boost people's net worth, they can potentially increase spending. So then that gets, well, sorry.
I think on the restrictive side, people underplay the impact the Fed does have. Like, if they held rates here or raised them, like, they could eventually crash the economy.
Yeah.
I'm just saying, like, but the impact you feel in the stock market, it's immediate.
Yep.
But continue. I don't know if that was the point you're making, but.
Oh, no. And this is even more to the point. 70% of the increase was owner's equivalent rent.
Yep.
Oh boy. So that's probably what the Fed is seeing here, right? They're not stupid. If any of us can see that and do the math ourselves as far as understanding what the components are, they understand it too. So they're seeing that, and the language now has changed because the other components of the CPI are muted, disinflationary, not deflationary, disinflationary. If we see deflation, that's a different story, but disinflationary. And then we're still seeing most of the inflation actually just come from owner's equivalent rent, which is lagging. No, don't even raise your hand,
No,
Andrew.
I
Just interrupt me.
didn't want to interrupt you. I want to just make it clear because people seem to really not get this, and it blows my mind. Inflation going down doesn't mean that we're going to go back to 2020 prices or 2019 prices.
Yeah.
Because I hear this all the time, like inflation's low. Well, why is my grocery bill so expensive? Like, yeah, it's prices aren't going to go down.
Respond to them. Skill issue. Don't worry, guys. I have the solution. What we do is we set price controls. We figure out what prices were for everything back in 2015, and then we just set it to that.
Oh, so
that doesn't include my salary.
Yeah, and you're too reactionary also. Like Senator Warren and her Twitter account have got our best interests at heart. You got to stop these deals, otherwise people get Jimmy John'd and Subway gets bought out. Getting messed over by Big Sandwich.
Oh yes,
I am a man of the people.
Who eats at Subway still?
Yes. And Ricky's point here is also correct. It's not necessarily good. It's not necessarily bad. No. Dan, if you want to come on and do a victory lap, Renato, I'll join you and do the REIT victory lap, and we'll just close it with the victory lap. As far as like the REITs discussion, because we were attacked.
Oh no,
I was attacked. We're missing Jesse, but
you know what this means? Like the more talking heads you have on a screen, the bearish people should get.
The more bearish on what?
Yeah, the more bearish. Yeah. More talking heads on the screen, the more bearish. That's what CNBC taught me.
Yeah.
I'm joking around. I'm joking around.
So how that kind of connects with energy, what we were discussing before, is if you have observable demand destruction, then I would be cautious energy here. But we were seeing a sell-off, and I was covering it in the club the past couple of days. Because some of the energy companies, not all of them, were presenting an interesting opportunity because the sell-off was due to strange and stupid political reasons, geopolitical reasons. Yeah, which ridiculous in my opinion.
Risk taking.
Just kind of throwing it out there. I thought ExxonMobil was an interesting ad, but that's neither here nor there.
We'll see.
Let me see this. I think we'll close it off at about 1 hour and 10. We'll open it up to questions. Let me actually close off the poll.
No. By the way, has anyone else said Santarelli like seriously around you in the Discord? Because I think it's just you. Yeah. Thanks, Fabio.
People talk about Santarelli.
It's a joke, by the way. It's always been a joke.
But he was memeing it. That's the only reason.
Yeah,
he was memeing.
Yeah, I'm known for trying to be macro agnostic.
And I think I'll also showcase the we'll do a victory lap. I want to do a victory lap with REITs.
Of course you do. I know you do. You will not be denied.
The amount of streams we have, people like, this REIT that you hold is down. Yeah. Why is your REIT down?
It's Fabio. Come on, Fabio. You know this train
like
never.
The meme that Leo made.
Yeah, the train is never that late.
Yes, yeah. The meme that Leo made was hilarious.
Do you have that?
The KRC one?
Yeah.
Oh, I have it somewhere. I bet someone has it in Discord. They can send it over to me. If you're listening and you have it, just send it over. I would love it.
Is it a Kingdom meme?
It's like, yes, because when KRC was going down, I was like, all right, it's time to buy more. It's time to buy more. and then it was like a daily reminder, KRC is down. I'm like,
okay.
And the performance of the portfolio was still pretty crazy.
Yeah.
Which was the funniest part. So it was like I think someone literally just sent it to me. Yes, thank you. Wow, that was so fast. Magic, guys, magic. We literally, yeah, it's wild. I love it.
Oh, it was Julius Caesar. Of course it was.
Of course it was. Yeah.
This it's literally sometimes. and the size of the position wasn't even that big. But it was funny. It was very funny. And the newest meme that I shared today, I thought was also pretty funny. This one was also made by Leo. Funny enough,
Yep.
Leo's just popping out the memes. What can
Oh,
I
that was
say?
a Leo meme?
Yes, that was a Leo meme. The one I
Yes.
posted today.
Oh, I didn't know that.
I'm kind of sad that no one's gonna make a Crocs meme with you.
Well, I guess now it's too late.
Yeah, it is too late. You already realized the profits, and I'm sitting on unrealized profits. But
Yeah, now.
yeah.
But this is the
Yep.
other one.
Did a lot of the REITs have? Was there a decent amount of short interest on these REITs?
Oh yeah, some of them were. Not all of them, but
Mm.
some of them were pretty high up there. I think the favored REITs, there wasn't much short interest. So KRC didn't have much short interest. I'd say, yeah. Alexandria, Agree, Crown Castle, Sun Communities, American Homes for Rent. Those guys didn't have much short interest, but you had ones that I wasn't involved with in
Mhm.
particular that had a lot. Brandywine.
No. Oh yeah. There's a name.
Yeah, Brandywine. MPW had for legitimate good reasons. So
I
memes
saw
can't
some.
move at the speed of a day trader.
You know,
You saw one.
someone commented, I think, on your YouTube post on this picture of saying they lost a bunch of money in MPW.
Yes, but it was because there was a YouTuber called Bowtie Nation, right?
Oh no.
So he says it in his comment, because when I spoke about MPW, there was a subsequent series of videos on MPW followed by, well, one of them I think was like one towards the beginning of the series, because I include the live streams too, the scandal that they were undergoing, and I actually received comments in that video. I think we can go back and look, or I implore everyone to go back and look. Go in the comments, see if the person hasn't deleted it, but it was asking me like, how much are you short for this video? Because I was basically just addressing the risk of the business, and what some of the accusations were. And so I had moved the allocation. I sold the entire thing and moved it to speculation to kind of bet if the allegations were false.
Mm.
But there was another YouTuber who's much larger than me, and he's the guy with the bow tie. He has a CFA.
Yeah.
He had pushed the stock as this safe investment, which is kind of a lesson to everyone. Do not invest just because someone talks about it on the internet. You need to do your own due diligence.
Yeah.
Even with someone who has a credential like a CFA, you gotta make the judgment off of their argument, not off of any three letters, because there's CPAs on this platform that are degenerate, there's CFAs that are degenerate, and have no idea what they're doing when you actually break down their valuation methodology.
Yeah, CFP, CPA, CFA.
I forgot about that CFP guy. Yep.
Yeah.
Who also pumps penny stocks. It's pretty ridiculous.
If anything, like I think there's greater value in seeking out people that disagree with you. Like that's how I found Capital Mindset.
What did we disagree with?
You disagreed with Everything Money's entry point on Intel. Hey.
Oh yeah. Hey, let's talk about that, because we have the one and only Paul Hunter.
Yep. That was a great live stream last night. I may be biased, but
I haven't actually watched that. I have to go and watch the stream.
Oh, Dan, your mic.
I always love a good Paul roasting.
Dan, your mic.
Yeah, Dan,
I enjoy roasting.
I was attacking Tesla trolls and Yield Max trolls at lunch today, so you probably see the comments.
Yeah, you've been a comment sniper.
But it was a good day.
Tesla done lately?
So I'm up 40%. I held that piece of junk for almost a year, and now I'm up 40% on it.
Yeah.
So I'm happy.
Yeah.
Wait, let me actually
I think
move this.
I think Paul from Everything Money is still short Nvidia. I believe he said this was a hill for him or something like that. But
I'm sure he is. He won't admit defeat. He'll hold that thing till it buries his family.
I had to find the clip of him saying that his wife said that she could manage money better than him.
Yeah, like the way he did it though, like this is just like gonna crush any gains that he gets from his other like long positions. Like, good God, if there are any.
Like, so for the record, like, listen, I never hated the one that they picked. What's it called? I'm trying to bring a phrase.
KRC.
The KRC.
Yeah.
So Don't lump me in with King. I was just in Vornado already, so I didn't
Yep.
feel like having 2 office replays. So
Yeah.
But yeah, I mean, I don't know why you would have thought buying an office REIT that it would have turned around in like a 6-month or a year period. I expected when I bought into Vornado, it was like a 2-3 year wait.
Yep.
So my thesis is I was going to double my money in 2 to 3 years because I felt so like the price of Vornado got so harshly hit, and kind of for due cause because New York City was ravaged by COVID, and I'm closer, so. I mean, like mass exodus of people left New York City during COVID.
Yeah.
And I could see it in the house prices in the outlying counties. So, but you knew like eventually these people would go back to New York City. Like things will come back to normal. I don't know why some people thought that might take 6 months. I'm like, it could take years. So I think we're starting to see that come back.
Do you know what's funny?
But it's just the impatience of retail is what, and I
Yes.
bought it like $22 and then it tanked to like 12. I didn't buy any more because I bought what I wanted. And then I like my thesis was that it's going to double in 2 to 3 years. So here we are halfway. Now we're halfway to where I wanted to be. So
it's pretty crazy because something
Hilarious.
like KRC from the average cost that we have, we've actually outperformed the market over that period of time with that investment, excluding everything because the total returns is different.
Okay.
What?
I was saying you're saying price return. Oh my God, KRC! I just pulled up a chart of that.
So my determination was Vornado was can they survive? Because I'm like I'm thinking of it like a preferred like I'm like they just have to survive this next hard time.
I love Andrew's reaction because that was raw. He had no idea. Yes, my man. All the haters.
Like when they cut the dividend, I felt better about it actually because I knew they were trying desperately to survive these hard times, and I'm like they're going to get through it.
Well, remember what I told you. I told you, Dan, that I think yours, if you're right, you're going to make more returns still than what I'm going to make on KRC because you went a little bit up the risk curve. KRC had a discount. It had the California discount, just being an office REIT discount. But at the end of the day, they had a better balance sheet, better properties. So I was taking less risk. So the discount wasn't as extreme as Vornado.
Yeah. Oh, yeah. Wow. Yeah. I remember at the time. I remember.
I thought, and like looking at them compared to some of the other, they had some diversity, whereas some of the other options in New York City were like all office. Vornado had one, they were in another city, plus they had some sign advertising revenue. So I was like, okay, I think best chance that they're going to survive the next like year or two. So
yeah,
and it worked out so far.
By the way, Andrew, KRC didn't cut the dividend, so that price return, it's even better.
Well, and the other thing too is if you zoom out on these companies,
can you share your screen with the?
Oh, I can share mine. I was looking at hold on, present. Let me pull it over here.
Why speculate and hope for tech returns in tech when you can just get it in REITs?
This book is so fun to read. I really enjoy it. Like I'm mostly done through it now, but
isn't that a fun book?
It's one of the most entertaining and useful books I've read in finance. Like it's informative and it's not boring. So
fully agree. We can even throw like Boston Properties in here just for fun. Look at like it's not like these companies. It's like because you might be like, oh man, because if you do this, you're like, I missed the boat. But then you do this, and you're like, and it looks a lot more extreme too if you look on like this chart here. Because if I do this, and I do like a 5-year chart, I mean, it looks. It's not like it's. I think VNO is probably even more extreme.
I'll just say everyone who bought these companies, you have now proven you are that guy. when everyone gets really bearish, you are that guy. I mean, you probably did it. Some of you might have been sweating bullets depending on the allocation, but no, you've been that guy with other things, Andrew. I mean,
there's my
CrowdStrike.
Hey,
yeah, CrowdStrike. You were that guy. You were the one who were like, CrowdStrike looks really interesting. The only reason why I have CrowdStrike at the price I have is it was not on my
gun to your head. I know.
Yeah, you were like, dude, CrowdStrike. What? CrowdStrike,
That's-
bro.
That's like that was the Grima worm tongue. Like you should buy CrowdStrike.
Yeah, no, that was. And I guess we can do an update on ICOM of the other one that you whispered into my ear. Because today it rallied.
Oh yeah.
Oh yeah, yeah,
Yeah.
yep.
Yeah,
yep.
today was a
Yeah.
good day. I thought like the market was ripping again today. And I was like,
It was
oh
just
no,
your
it's just, it's just
Well, I thought so too. I mean, well,
Same here.
Meta, Alphabet, Amazon. So big tech kind of remained
Yeah.
flat, but
Mhm.
the other positions, I think the holding co had a higher daily return than the personal holdings, but it still was like, what the heck's going on here? So yeah, it was pretty nice.
Victory laps for everyone.
No, victory lap is so needed. I deserve it. Dan deserves it for
And you guys
REITs here.
were
Jesse
the
deserves
only
it too.
people. There's
It
one other
hurt
person.
because
I
it
think
got like
Chris.
I lost 50% on Vornado at one point. Like
That
It's pretty
man,
brutal.
you are that man.
No, I was gonna say I think Chris Patel's the only other person I've heard on YouTube even talk about REITs, except for maybe this Bowtech guy who I didn't even know talked about MPW. But yeah,
he has SL Green, and he did buy really well on SL Green. He did good on that.
Yeah.
So
There
I'm
were
just
so many though. There were so many. That's
that
why I
one
was
was more
gobbling it up.
risky than mine. So if he got
Yeah.
more return than deserved, because SL Green was, I thought that one might go bankrupt. Actually,
Here,
that one.
if anyone wants more public content after this and is wondering, what video did I have? Here, let me find it. I have a video discussing this very topic. That aged well. So it was. Give me a second.
It was entitled Deep REIT Value.
No, it's called Are REITs a Bad Investment? And it was posted 6 months ago, May 22nd, 2023. Here, I'm going to share my screen. In a second, give me just one quick second. Share screen. We'll do it this way. All right. So you can go check this video out. Are REITs a bad investment? You can also find the video in a post, in a community post that I provided. It takes you right to it. And I believe Fuhat timestamped it. I forget if he did.
No.
But if you watch this video, it's a whole discussion about REITs. I have other videos discussing why 2023 is the year of REITs. I even use that terminology in this video, but I have live streams, videos. I was on record a lot saying that 2023 would be the year to accumulate REITs. And that's exactly what we did. So it's over. 2023 is over. 2023 was a fantastic year. 2022 was a fantastic year. 2021 was a clown year that everyone made money. 2020 was a fantastic year. I think everyone made money too.
2021, I'd pump the brakes there. If you were like a Paul who shorted, like
Paul's a moron. He lost money in
yeah.
2020. He lost money in 2021. He lost money in 2022. He lost money in 2023.
Yeah. So like,
I can't wait to do the next two.
oh yeah.
Not right away though.
Quick Paul rant.
Yeah.
That guy just so
got
arrogant.
crushed
He
even in
irks me.
2022 when he was supposed to do well.
Yeah, I love it.
He beat VT. That was the only one he beat, but he lost to Spy and QQQ. So
how do you know this?
That was kind of odd. Yeah, it said he beat VT in 2022, which I'm not.
He said he beat VT.
No. When I did the portfolio back test.
Oh, because you have no idea, because he doesn't provide timestamps of and weighting, so you have no idea. Yeah. And there's no like video format where he goes, this is the updates on the portfolio, so you have nothing to really gauge the it's pretty stupid. But the lawyers stop it.
They didn't stop it 2 years ago. Or okay, I can find what dates. I have the videos saved already. Let's see.
Julius Caesar's right, because I doubt it too. I doubt he beat VT because he does a silly strategy when his stocks are winning.
I forget.
Portfolio number 2 will be February 20th, 2022, and then the third one is a March 22nd, 2022 video. So he didn't have any problem with lawyers until only a year ago.
Yeah, well, we know he's down this year in a pretty crazy bull market, because I think according to my broker, the let me log into my broker and see the total return of. I don't need this tab. Let me
Because
see
how
what
many
the total
people
return.
get margin called when their other positions are so great that they offset them getting their faces ripped off?
Don't even get me started, man. Don't even get me started. Because Dan's right. The bragging rights that he had to when things get bad, I'm gonna outperform. 2022, man, that was your year. That was your year. What happened?
Yep.
He underperformed. And then 2023 runs around where it seems like everyone and their mom did well because you have the year-to-date bros, right? And
You know
it's
what
like,
else? We can do the EBIX, or you could do it, the EBIX video where he claimed that was a better investment than Tesla. I got those videos downloaded.
Oh
Ebix?
my
What's
god.
Ebix?
Cringe.
It went down like 90%. He said it was better fundamental investment than Tesla in 2021.
Because it was a fraud, wasn't it?
Oh, I
The
got way
Nasdaq-
more than that. There's so much.
Well,
Like,
what-
everything he's invested in is wrong. Like he's been wrong and lost money or miscalculated everything that I can
Yeah.
find. I can't find
think-
anything that he did well.
He has zero right to criticize any of the other YouTubers.
Well, I think he's like, I think it's like a psychological thing. I think he's just a person that needs to prove that he's smart and thinks to do that, you have to be contrarian in everything that you do. And he's too arrogant. Like he's like got like the hero complex. Like I'm a genius, just no one realizes it. But one day,
Well, because Dad gave him all his money,
right?
Yeah.
and so he's never actually. He's everything inherited. So the Nasdaq
Very nice.
Composite is up 28.48%, and then if we go to the S&P 500 total return, oh sorry, that's the 1 year. I apologize. The year to date, sorry, because people were like, "Whoa, no, it did way better." No, Nasdaq Composite year to date is up 40.77%. And then if we actually change that up to the S&P 500 total return, we have a total return of 24.53%. So he is, I don't know exactly how much he's down, but we know he's down. And the point is, you kind of threw a rock. Well, no, that's not true. Small cap did bad. REITs are only rallying towards the end. So you had to be, it depends on when you added. Yeah, depends on when you bought REITs. Healthcare, I think, did pretty bad, especially towards the end of this year. Pharma did pretty bad. You have the big boys, except if you're Eli Lilly. If you're Eli Lilly, and a couple other names, you've had a bad year. Vertex Pharmaceuticals has done really well, but no. Other than that, any involvement in pretty much like any tech, any shitco that you could think of. Not all shitcos, but most shitcos have done really well. Yeah, to be honest, we're all just morons. We should have all just bought TQQQ. Like honestly, it's like, because my year to date is a measly. Let me bring this up. So this is up 126% TQQ. Well, this is not correct because it has to update for today. So this is as of December 13, 2023. What's
SCHG up this year? Maybe I should look at that.
Let me look that up.
Probably.
Or you get that up.
Yeah.
But my year to date right now sits as of yesterday, so not including today's performance, 60.05.
That's your year to date?
49%.
Haha.
Yeah, what now?
Are we year to date bros now?
Yeah, I'm gonna.
Are we the bad guys?
Hell yeah!
Oh, all right, but real talk.
I love
real
this.
talk.
This is my favorite ETF, honestly. I think.
Like we got to think holistically here. Paul has outperformed us in one thing that I don't think any of us can touch him in, and that's tax loss harvesting.
No, I execute my tax loss harvest like a pro. What are you talking about?
Oh yeah,
really?
we have.
But wait, no. To be a pro at tax loss harvesting, you have to have gains to be able to offset your losses, and I doubt. Like I question his any gains.
Well, he'll have a 3,000 carry forward for the rest of his life, at least.
He won the lottery. Unlimited $3,000 deductions. Power.
That's where the real power is. He who controls the tax losses controls the world.
Poor dad.
Yeah.
His dad's probably a great guy, and he worked his ass off, and he saves people's lives. And there's your kid.
Oh my gosh, YouTube just like recommended me some video. This guy said he's lost $1 million short in the Nasdaq this year.
No.
I
Paul's
want to
almost
debate.
like
Okay, Fabio, I want to find somebody that shorts and does shorts or calls on the market, and fucking interview them so badly. We'll find someone.
That shorts the market.
Either way, someone that does like calls and puts on like some index, like SPY or QQQ. I just want to be like, why? What are you doing to yourself?
Well, that's
How
what
many
I always.
people need to lose all their money on Wall Street bets for you to realize how dumb that is? What?
Estow Jeremy.
Yeah.
Oh
There's
my
a
god.
reference. There's
Oh,
a
yeah.
reference.
He also went short home builders at a great time.
Oh yeah.
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 I saw
That's-
that.
That's worse
Like
than his
how
Estelle.
do you short the housing market? It's so depressed right now to
Yeah.
imply it could go any further. Like
Yeah.
we're already
Builders.
like 20 years ago in some of the metrics.
Builders were incredibly disciplined this entire time. Also, like if they're frothy and reckless, maybe, but
I wanted to say this about Paul, or not, yeah, Paul. I actually think there's something wrong with the wiring in his brain because like the excitement he gets, like he's like, I bought a stock and it went down. Yes. He might have like a feedback loop that his brain's like broken. So he like without knowing it just buys awful stocks that are going to go down because like he just has
well,
broken.
Yeah, that's
you also
an odd reaction he does because it's like, well, isn't your analysis tell you when to buy it? So you're
Yeah.
buying it at the price you want. So if it goes down, that means your thesis is kind of flawed, I guess. I would think that.
His methodology, though, his modus operandi has often been sell puts, sell cash secured puts. So in his mind, he's like, yes, I get the premium and the shares.
That's
yeah.
about how he sounds too.
Yeah, probably.
This is also true. I completely forgot about the silver ETF.
Oh yeah, yeah.
Like, oh my god.
Silver ETF?
Yeah. He
Wow.
it's like you
His
should put,
reserve funds, right? Wasn't it?
yeah, you should put your emergency fund, your emergency fund into the silver ETF.
Yep.
What?
I love that.
Andrew, you did not know this?
Yeah.
You're like all things. That man is hilariously dumb, and
Yeah.
When was this?
This was a
look at
while
the
ago.
smile in Andrew's face.
Yeah.
Look at the smile in Andrew's face.
I think he's met. You didn't know this?
Mhm.
I did not know this. No, I am actually super excited to find out and listen to this.
Well, why do people need to do dumb stuff with their emergency savings? Like,
Because it's
like,
Well, I showed like I put it in a savings account on Barclays, and I think someone commented, "Why don't you put it in a money market for a higher yield?" I'm like, "Because it's
you
my
can put in DeFi
it's
for
my
better yield.
savings account. It's supposed to just sit there for me if I need it." Like,
I park my emergency fund at FTX.
oh boy,
God help you.
I'm joking.
Well, no one can help you.
it's still up. It's still up, Andrew. You'll find it.
Really? Well, yeah.
It was a year ago, so
No,
No, what was the recent thing that he said that was just incredibly stupid? I don't know. He says so many dumb things. I'm really upset that did he take clipping away from his channel? Or you can't, or was that everything money?
everything money. I think. Took
Yes,
it
because
away
they don't want you to take what they say.
Yeah.
is
Literally.
that true?
Yes.
Yeah.
do
It's a sad state of affairs.
So what you have to do if you're gonna hunt down all the stupid stuff they say is just like save every video.
yeah.
They did
And
too.
timestamp
They
it.
pulled
Yep.
clipping.
Mhm.
Yeah. So you save every video. Everyone out there, if you want to help out Dan, just save the videos and then just.
Oh, I
send
got a
them.
whole folder. He
Yeah.
can't hide from me now. I got all his articles he wrote and everything.
It's
Oh,
like you'll
yeah.
never run out of material because that guy will never stop talking.
I have
and
comments
literally-
bashing Amazon
Oh,
on Seeking
dude,
Alpha on
this
other
is-
people's articles. So
Let me just say, this silver video is like, it's like Chef's Kiss. Because did you see who the sponsor is?
It's FTX.
Peter
Oh,
Schiff.
yeah.
FTX.
Oh,
Yeah.
memes come true. Because I totally forgot about that.
I guess. Oh god.
Yeah, we live in a crazy world, and
Yeah.
the people still have lots of subscribers, which is funny.
Yep.
Because I mean, I get it. Well, I don't get it, but this is like this is how they make money. This is their career.
Mhm.
So it's kind of
There it is.
Hold up.
Yeah.
Oh my gosh. Okay.
Yeah, Jesus.
Silver went down 30% after that video. It's so stupid.
Andrew
It's
loves
funny
it.
because gold has been on a tear, hasn't it?
No, but I'm saying like it's kind of recovered since then, and it's like it's only down a little bit since then. But I'm saying so he put it out on April 19th. This ETF was at 22.31.
Mm-hmm.
By July 15th, it was down to 17.19. Like,
When a precious
that's
metal gets eaten
that's
away
your
by
emergency
inflation.
savings account. It's cut.
This is Fuhat telling us we need to go private soon, and then
Yeah.
we can talk
Yeah.
about those stocks.
Yeah.
Okay. We'll kind of close it off here, ladies and gentlemen. Thank you guys so much for watching. Like I said, I've been trying to do more and more public streams. We'll see about the public videos because that all depends on energy levels when I'm done with work for the day. But I want to do those. All right, so we're going to switch over to private at the club. If you guys are curious about the club, the link is in the description below. If you liked this video or live stream, feel free to leave a like, subscribe if you want more public content in the future. Yeah, with that being said, thank you guys so much for watching, and we'll see you guys on the next one. Bye.
Peace.
We'll do it live. Okay. We'll do it live. F- it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.